Good evening everyone. Today is the 13th of August and we have a very critical high stakes meeting coming up on the 15th of August. It is India's Independence Day, but obviously the world's focus will be elsewhere. The world's focus will be at Alaska, where Putin and Trump are meeting, and it is going to be an extremely high stakes meeting. So let's evaluate what are the possible scenarios and outcomes that can happen and how will it affect financial markets. Okay, but first let us look at the agenda of the meeting. Very critical. What is the purpose and the agenda of the meeting? The primary purpose of the meeting is obviously to end the Russian-Ukraine war. Okay, discussions are for a ceasefire, for a peaceful resolution. Now there has been hints by Trump on territorial swaps. Okay, you take some land, you give some land. The idea of territorial swap is something which is vehemently opposed by Ukraine and their president. The entire country is vehemently opposing this idea of territorial swap. Okay. Now the third point, the tone is very interesting. The US tone for this meeting is that they are describing it as a listening exercise. They want to hear what Putin wants to say. They want to understand what is the stance of Putin. Okay, so that is quite interesting. They are not looking at concluding or reaching of big agreement, but they are looking to understand what Putin wants to say. Obviously, Ukraine, Zelensky is not attending, and that is one of the reasons why both their European allies and Ukraine are unhappy that they are not part of it, and they are doubting whether this meeting will have a long lasting impact or not. Okay. Now let's try and understand each scenario one by one. We have created three scenarios. Let's dig deep onto these scenarios. Okay. So the first scenario is status quo. Status quo. There is no change. Okay. Now if everything remains as it is, then obviously there will be not much of an impact in financial markets. Okay. Oil prices will be stable. The risk premium on various financial assets of the world will remain as it is, and Indian rupee will remain weak. It has weakened in the last 1.5 months, and probably it will remain weak. So DXY, the dollar index, on the other hand, might remain neutral, or it might go slightly higher because of its safe haven status. Okay, but even if there is no change and there is status quo, hope will remain high because a lot of global leaders are meeting each other. Okay, Modi is going to meet the Chinese Premier Xi, and Putin is expected to come to India. Modi is then traveling to the US for UNGA. Okay, so there are a lot of global leaders meeting each other. So even if there is no change, there is will be a lot of hope that this war comes to an end, and there are efforts taken by global leaders to end the war. Okay. So now let's look at the second scenario. Scenario 2 is that there is a ceasefire, whether it is a temporary ceasefire or whether it is a long lasting ceasefire. The expectation or the scenario of a positive breakthrough. Okay. This is going to be a very big event, because in that case there will be a big change in the market and the risk on mode will set in. So globally the equities will surge higher, geopolitical risk will reduce substantially, the equities will surge higher, oil prices will come down a bit on increased expectation that Russian supplies will come into the market and reduce geopolitical risk. Now a ceasefire could significantly strengthen the Indian rupee. Okay, remember rupee has been weak for about 1.5 months. All the risk premium that is priced in the current price of rupee, all of that will go off and rupee could strengthen significantly. Remember, this truce could also potentially lift the sanctions that has been imposed in Russia, and furthermore, whatever the penalties which US is threatening on India due to Indian oil purchases from Russia, all that will go off. So rupee might gain quite a bit. Now the DXY, in this case the dollar index, will strengthen quite a bit, primarily because US will be seen as a broker of peace, as a messenger of peace, and probably Trump will have a stronger argument to get the Nobel Peace Prize. Okay, so that is scenario 2. Let's look at scenario 3. Now this is the negative scenario, okay, that the talks are inconclusive and the hostilities continue. Now this is the negative scenario which could possibly be, and in this kind of a scenario the oil prices will go higher because the disruptions are also there, Russian supplies will not come in. The Indian rupee will continue to weaken. It is weakening a bit and it will continue to weaken because of the spike in oil prices, and the DXY or the dollar index could decline, primarily because it's a failed attempt by US and the dollar index could be looked at it negatively. Okay, so these are the 3 possible outcomes and scenarios that can happen. Now, why am I telling you all this, and what should be our hedging strategy? Okay, see, remember, it is a very big event, very high stakes event, lot of uncertainty surrounding it. Whatever is the outcome of the 3 that I have outlined, anything could happen and there could be big volatility after the event. So what should you do? You should take hedge decisions evaluating each and every market scenario. Evaluate the scenario, assign certain probabilities, and depending on that probabilities, you take your hedging decisions. You should stay proactive, okay? Don't be inactive. Avoid that inactivity feeling. Okay, so be proactive, hedge positions, keep your positions hedged. Both exporters and importers look at your risk strategy, look at your business benchmarks, and then keep positions hedged. Keep your unhedged exposures to a minimum, to a reasonable lower ratios, and keep your positions hedged. That is the overall recommendation, because the markets could turn volatile after this big event. Okay, so that is from my side. Ladies and gentlemen, have a great evening ahead, and for more such insights, please join our WhatsApp community.